it's all good.
Joining us now is Bloomberg's Maria Tadeo in Brussels and Bloomberg's Anne-Marie down in D.C. Maria, I want to begin with you. What we're hearing right now, the difference between optics and substance, perception and reality.
Jonathan, this is so important at this point, and every official that I've spoken with today, particularly those in Eastern Europe that really know how Russia operates and that really know the Russian tactics, they say we'll believe it when we see it. Yes, it may sound encouraging. Yes, this may be optimistic, but we've seen Russia do this before. They say A, but in reality they do B. I'm also reminded that when you look at the troops in Eastern Ukraine, this is a war that's been going on for 8 years. Sometimes they pull them back, but then they bring them back. So there is a lot of concern about just how honest Russia is being right now. And I would also point to the words of the NATO Secretary General, who's just speaking right now. And he says what we're looking at this point is Russia, but he also mentions China. He says these are two authoritarian countries that are operating together to dictate the terms for smaller countries. So the tone really, when you look at the European side, and I would argue it also applies to the United States, NATO, and the Western allies, is that at this point, they really don't believe what they see. They want to see the proof. And at this point, they're not getting the evidence that they were hoping to get.
AMH, your reaction?
Well, we haven't heard yet, Jonathan, from the White House, but I imagine, as Maria is saying, this will be very much so. They want to see the proof. The Ukrainian foreign minister took to Twitter about 45 minutes ago saying we have a rule in Ukraine. We don't believe what we hear. We believe what we see. And I imagine that is exactly what the White House is going to say. We cannot discount the urgency we have seen from this White House. They have moved the U.S. embassy personnel from Kiev to Lviv, which is just about 70, 80 kilometers from the Polish border. They are clearly concerned based on the intelligence that they are getting. And then, of course, you have the NATO Secretary General this morning saying everything is in place still for a Russian attack. And when you look at what Russia was saying in terms of pulling back the troops, it was a video with the Defense Ministry spokesperson showing this video, very much so like yesterday's performance from President Putin and Lavrov and the defense minister, very much so, Jonathan, for a domestic audience.
Chancellor Scholz with Vladimir Putin today, Maria, that meeting ongoing. Are we expecting a news conference from that?
We are expecting it, and the tone will be so important. And everything, in fact, about this meeting between Olaf Scholz and Vladimir Putin will be key, from the tone, the mannerism, and the way the two interact. The German the German chancellor is under huge pressure to show that Germany under Scholz is tough on Germany, that there will be real sanctions. That Germany, by the way, is willing to take the economic pain that will come with sanctions. And by the way, the biggest question of all, it's Nord Stream 2. Yesterday, when he was asked again, Olaf Scholz says if there's an invasion, we, quote, will know what to do. Whether or not he tells that to Vladimir Putin to his face in his home territory, that is the key.
Just one final question from me to you, AMH. Help us all understand what happened in Russia's State Duma today. They're trying to get the Russian president to sign off on something quite complex, nuanced and complicated. And I want you to go through it piece by piece to help us understand what's happening.
It's incredibly complex, and we should note that Russia has its own domestic politics the way every single nation does. So what you have is one group that was pushing for the president to outright say that these regions in Donbass, where there's been fighting since 2014, 2015, there's been fighting in East Ukraine for years. We should make that clear. They want to recognize them as part of Russia. Now, Ukraine immediately says this would go against the Minsk Accords. And right now, what we do know is that Russia helps supply these areas, but they are out there on their own. You have separatists fighting from each regions in these areas. What I think is interesting is potentially, Jonathan, this could just be a leverage point for President Vladimir Putin. What he really wants is those Minsk Accords, the way Russia interprets them, because it's ambiguous, the way Russia and Ukraine interprets the second Minsk agreement signed in 2014 under President Petro Poroshenko for Ukraine, which ended a ceasefire, by the way. That is why those agreements came into account. Under those Minsk Accords, what President Vladimir Putin would want to do is basically have political control over these regions in East Ukraine. And with that political control, those regions could block foreign or domestic policy that Ukrainians are trying to pursue in Kiev, notably joining the European Union or joining NATO.
Anne-Marie, AMH down in D.C. with Maria Tadeo. That news conference taking place right now with the Russian leader and his German counterpart, Olaf Scholz. Vladimir Putin on the screen at the moment. When we start to get some headlines, we'll work through them for you. For the market right now, at least, it's a bounce in equities, yields higher, crude lower. WTI down by 3% to 92.58. Brent down by about 2.8%, down to 93.83. The oil piece of this story at the moment is fascinating. I want to bring up this quote from the Washington Post a little bit earlier this morning. The domestic issues for this administration, their relationship with what's happening on the international stage. Here's the quote. The White House and the top Democratic lawmakers are beginning to weigh a new push for a federal gas tax holiday, potentially pausing fees at the pump as part of a broader campaign to combat rising prices. Let's bring in a team and have the conversation right now. Judy Bill of Kane Anderson Rudnick, Jonathan Golub at Credit Suisse, and JP Morgan's David Leibovitz. Julie, this inflation story, hot PPI this morning, hot CPI last week, crude still in the 90s. How big of a problem is this for corporate America?
I think that if I think about things I'm grateful for, one is that I'm not a CEO right now, because what they're trying to manage is rising prices across any supply chain, their wage costs going up, instability in terms of capital markets, and now, a little war that might be happening, geopolitical problems. So it's a real challenging environment for most CEOs. And as investors, I think we're looking to businesses that have been through entire cycles and that can manage through this level of uncertainty. That's the kind of stocks we're most interested in.
John, I'll say this up front. You're still incredibly constructive on this market. You're looking for something north of 5,000 year end. But you do say investors are overly anchored to low inflation. What is it about that that's important, John?
Yeah, I look at Bloomberg, and one of my favorite features is ECFC, and it tells you where the consensus is among economists in terms of inflation and economic growth. And the majority of economists on Wall Street still believe that we're going to end the year with inflation something in the ballpark of less than 3%. Now, while I do believe that inflation is going to come down off of these levels a bit, I think that under 3% by year end is entirely unrealistic. And you're going to have a very strange situation where the Fed and Janet Yellen and Treasury and consensus among Wall Street is that things are going to fall. They'll get it directionally right, but the level of that fall, the pace of that fall is going to be nowhere near what they expect.
David Leibovitz, let's take the John Golub view of the world. PPI is looking hot, inflation is looking sticky. Just how much price tolerance is out there for corporations to pass this on?
So it's interesting because we have seen corporations respond to these higher input prices over the past, call it 12 or so months by passing them along to the end consumer. I think there are obviously limits to the amount that prices can go up before demand begins to wane. But, I too am fairly constructive on where this market is heading, because it's important to remember that it's the nominal growth story that matters for corporate profits. So even in a quarter like the first quarter, where we think real growth is going to slow, again, we think that revenues are going to hang in there due to this pricing power that is relatively apparent across corporate America. That very well could lead demand to fade during the second half of this year, and that could arguably take some of the wind out of the sails of inflation. I agree that below 3% feels like a little much, but something around 4% seems perfectly reasonable. And so I think it's important to take a step back and really see the forest for the trees. There are a lot of cross currents that are going on right now, which are going to have a material impact on what the economy looks like in the second half.
Julie, I want to circle back to something you said at the start of the conversation. You said you looked at companies in leadership that have performed well in dicey times before, through recessions. Does that mean that you're preparing for the end of the cycle, or you just think that that's the comparison that you think works for the moment we're in?
Well, I think for us, we try not to predict too much. We try to just prepare ourselves, and generally businesses that are well positioned through recessions are good businesses through an entire cycle, because we're long-term investors. But I would say I am concerned by the level of inflation, because it's really not up to the Fed. The Fed is being dictated by inflation. And if it really wants to manage it correctly, if it continues to spiral the way it has been, and if that actually changes consumer demand, because we are in a consumer economy, I think that's really problematic. And that's where we need to be focused on is, does the Fed break the back of inflation by being really aggressive initially out of the gate? I mean, if you had asked us 6 months ago, would they be considering a 50 basis point rate hike in March? Everyone would have said no. And here we are.
Judy Bill, sticking with us alongside Jonathan Golub and David Leibovitz. Let's get you some stock movers going into the opening bell. About 20 minutes away Here's Abby.
Hey, John. Well, we, of course, have stock futures sharply higher, up more than 1%, perhaps snapping a 3-day losing streak for U.S. stocks. And, of course, big tech really leading the way. Making this interesting, of course, is the fact that yields are higher, too, but investors don't seem to care. As we have Apple, Microsoft. We also have the chip space rallying in an even bigger way. NVIDIA and AMD both up more than 3%. NVIDIA, of course, does report on Wednesday. So it seems like there's a little bit of a relief rally, a bounce around geopolitical events. Energy supports that idea as well. We have the energy sector down, oil down too after briefly touching $95 a barrel yesterday. Its highest level since 2014. ExxonMobil, Chevron, and Halliburton all down more than 2%. Again, it looks like we have a relief rally around subsiding geopolitical tensions, John.
Abby, thank you. Some headlines coming out of that news conference with the Russian President Vladimir Putin saying he had a frank exchange on Russian security initiatives, that Nord Stream 2 is technically ready to ship gas. I'll bring you some more headlines as that news conference continues, and get the views as well from the German Chancellor, Olaf Scholz. Coming up in this programme, away from the geopolitics, investors bracing for a global tightening cycle.
In view of the current uncertainty, we need more than ever to maintain flexibility and optionality in the conduct of monetary policy.
That comes
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
from New York City.
We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. To recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
Earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Any adjustment to our policy will be gradual. Our target is an inflation rate of 2% over the medium term. To achieve this, we will take the right actions at the right time.
The ECB President Christine Lagarde there, ongoing right now in Moscow, a joint news conference between the Russian and German leaders, President Vladimir Putin and Chancellor Olaf Scholz. The headline coming from Olaf Scholz at the moment, important that Germany and Russia continue talking. That from Olaf Scholz. Earlier, the Russian president saying ready for more talks on security with the US and with NATO as well. Just this change in tone, this shift in the last 24 hours, whether you think there's been a change in substance is another question, but the change in tone enough for this market just to generate a lift for equities, equities higher, yields up, yields higher, crude lower. Looking at crude right now, WTI and Brent tracking lower by more than 3%, on Brent to 93.51, on WTI by 92.20. I'll keep tracking these headlines for you, but if this settles in a favourable way, you would hope for the ECB unlocks a conversation about doing something soon to respond to what's happening on the inflation front. The conversation has shifted in a big way. We're actually thinking about doing something at the ECB. It has been 10 years. The conversation shifted for this market into the summer. They're pushing that back out all over again. For Jim Bullard of the St. Louis Fed at the Fed, he's very focused on March, the middle of March, and the potential for a big move. He reiterated his hawkish view, saying this: I do think we need to front-load more of our planned removal of accommodation than we would have previously. Our credibility is on the line here, and we do have to react to the data. Reacting to the Fed speak, here's Mike McKee. Morning, Mike.
Morning, John. Well, I think one of the big things that Christine Lagarde was saying that people have overlooked is she said they'll do the right thing at the right time, which may be a different timing from what Jim Bullard sees for the United States, especially after the producer price index this morning came in at twice the rate economists had forecast, 1% on the month of January. That is double the 0.5 that we thought we would get. The core rate comes in up 0.8 on the month. So bad news for the PPI, and that does suggest that there are still a lot of inflation pressures in the pipeline. Now take a look at what's been going on with services versus goods. And the thing is that goods prices had been going up because of supply chain problems, and that's an issue given the fact that we bought so many goods we can't get stuff. The services prices disappeared as people stayed home, but now services prices are rising and goods prices are still rising. So inflation becoming more embedded in the economy, and that's a problem. What does the Fed do about it? Well, that may depend on who's on the Fed, because today, John, the Senate Banking Committee is voting on the nominations of all 5 of President Biden's picks for the Fed, Jay Powell and Lael Brainerd to be chair and vice chair, and then Sarah Raskin and Lisa Cook and Philip Jefferson to be members of the board. They're all expected to get through, but Sarah Raskin could get through only perhaps on a tie vote, which would mean the Senate would have to take extraordinary steps to bring her to the floor. And of course, we're still waiting on the senator from New Mexico, Ben Ray Lujan, to come back. So for a while, the president's choices may be on hold, and the Fed may have to somewhat shorthandedly go after inflation in March.
Mike McKee, thank you, sir. Trying to do 2 things this morning, so bear with me if you can. Working through this news conference taking place in Moscow at the moment, then we'll return to the Fed conversation as well. If you can get those pictures back up, that conversation taking place, the news conference in Moscow, in Russia, with the German Chancellor Olaf Scholz, and then the Russian President Vladimir Putin. Olaf Scholz, the German Chancellor on your screen right now, saying the following: the current crisis is the most serious in Europe for some time. Can't see any justification for Russian troop build-up. We must continue to seek a peaceful solution to conflict. Again, I'll try and keep on top of that for you. That's the conversation taking place in Moscow, Russia, in that joint news conference. Back with us, Julie Bill, Jonathan Gollop, David Leibovitz. Jonathan Gollop, I want to come to you. David Kostin of Goldman dropped his price target year-end on the S&P from 5,100 to 49. He said it was not about earnings, it's all about valuations. And when they put out their forecast back in November, they saw 2 hikes this year. Now they see 7. My question to you, John, would be, we're pricing in more hikes. Why haven't you moved?
Well, I mean, first of all, I agree with David Kostin that the earnings are going to be terrific this year, and there's very little indication that the earnings are softening. As far as valuations are concerned, the multiple of the stock market at 19.5 is 3 multiple points higher than it was a little over a year ago. So the stock market has already really reflected a fair bit of this concern. And as far as the Fed moving 7 times, maybe they will, but they're only going to do it if the market allows them to. This whole question of whether the Fed is going to crush demand and crush the economy to bring inflation in check, it's just not going to happen. The Fed will try to move rates off of 0. I mean, we haven't even done a rate hike yet, but the idea that they're going to, push us into recession, which is effectively what's being implied by David Kostin and some others, I think is just not going to play out.
Judy Bill, your thoughts on the same topic, please.
Well, when I think about the Fed, right, I think it's important to remember the dual mandates of the Fed. Those are inflation and unemployment, right? That's the wife and kids. Investors are kind of more the side piece, right? It's important to keep us happy to a certain extent, right? But the mandates are still unemployment and inflation. And I think if inflation continues to get out of hand, it has long-term detrimental impacts to the economy. And so that is really where the loyalty lies. So I think, hopefully we can see some kind of inflation pullback on supply chain concerns. But I'm concerned that it really won't be up to us as investors and satisfying investors, because we have to think of the long-term impacts of what extremely hot inflation can do.
David, final word.
So, I think it's important to recognize that there are a lot of these cross currents, as I was saying earlier. It's going to be challenging for them to coexist, right? We're not going to see Russia invade Ukraine, energy prices spike, prices go higher at the pump, and a Fed that hikes 7 times. And that seems to be the sentiment in the market, that everything that can go wrong will go wrong. I think that the Fed is going to react to the data. There's something that was very overlooked during the press conference in January was the fact that Jay Powell mentioned the word decision something like 15 times, but 14 of those 15 mentions were in the context of no decision has been made. And so the Fed is going to react to the data as it comes through the door. And importantly, from a purely mathematical perspective, inflation is going to begin to cool off during the second half of this year due to more favorable base effects. And so I think a lot of people are putting the cart before the horse on the Fed right now. They're going to make decisions that they see fit based on the way the economy is running in the second half.
We'll come back to that. David Leibovitz, Jonathan Golub, Julie Bill, sticking with us, reacting to some of the headlines we've had in the last 24 hours. Crude lower by more than 3%, almost 4 percentage points lower on WTI right now at 91.91. Keep talking about going back to this news conference, this joint news conference with the German Chancellor Olaf Scholz and the Russian President Vladimir Putin. The headlines from the German Chancellor read as follows: "It's our duty to avert military conflict in Europe. Lasting security only achieved together with Russia. Russian aggression would have serious consequences." Goes on to say, apparent Russian troop withdrawal, a positive sign. I'll return to that when we need to. Coming up, the morning calls, and later, Morgan Stanley, said to be among block trading firms facing a US probe. More on that just around the corner. From New York, this is Bloomberg.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Three-day losing streak on the S&P, and we bounce a bit, 5 minutes away from the opening bow. Futures are higher by more than 1% on the S&P, on the Russell, on the Nasdaq. If you switch up the board and get to the bond market, Yields up, equities up. For now, at least, yields are higher by a few basis points on 10s by 5 to north of 2%. On 2s by not even a basis point right now to 157.53. Equities are higher, yields are higher, crude is lower. Just a little bit of relief off the back of some of the softer headlines we've seen so far out of that news conference in Moscow, Russia. That's the price action. Here are some of the morning calls. Bank of America downgrading the gap to underperform. The analyst expecting slower sales growth due to continuing supply chain disruptions. Your next call from Wolf Research upgrading American Airlines to peer perform. The analyst expecting shares to transition from lockdown laggard to reopening winner. And finally, Wells Fargo cutting its Twitter price target down to 42, highlighting management's ambitious forecast amid increasing growth headwinds. Coming up on the programme, the biggest banks, including the like.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Happening right now in Moscow, Russia, the Russian President Vladimir Putin in a joint news conference with Olaf Scholz of Germany, the Chancellor, saying that a partial troop pullback decision has been made. That unlocks some gains right now on the S&P. Futures up by more than 1%. That's been a story of the last 12 hours or so. Futures positive on the Nasdaq by 1.5%. We drift higher here. We push higher. We bounce after 3 days of losses. Switch up the board and get to the bond market. Yields are higher too on 10-year treasuries by 5 basis points. Call it 6 to 2.04%. On crude up by 3.9% to 91.70. We're down rather by almost 4 percentage points. And euro dollar is positive by 0.4% at 113.49. Opening higher then on the S&P 500, about 25 seconds in, advancing 0.9% on the S&P. At the bottom of the pile, no surprise given what's happening in the commodity market. Energy equities are down by 1.4%. Consumer discretionary top of the pile by 1.44%. Looking at some of the movers around the open, here's Abby.
Hey, John. Well, we are certainly looking at a nice snapback rally here. The first update in 4 for the major indexes. And as you were just mentioning, it's all about tech up, energy down. Taking a look at some of those tech names, despite the fact that you have yields higher, it seems to be truly havens are selling off there, so not pressuring valuation on Apple and Nvidia. On the other hand, with crude oil down 4%, as these geopolitical tensions seem to be easing a little bit, you have Chevron and Schlumberger both down more than 2.5%. We also have some deal action to take a look at. Intel is buying Tower Semiconductor for $53 per share. Not surprisingly, Tower Semiconductor is soaring, up 41%. Intel actually flat. Often the acquirer is down. And then there are headlines around the idea that Monster Beverage and Constellation could put together some sort of deal. Monster Beverage, the company that would be acquired, up about 2.1%. And then finally, with yields higher, we do have banks higher. This was not the case yesterday when yields backed up in a big way. Banks were actually down on the geopolitical tensions. But today you can see JP Morgan Chase, Bank of America, Citi, and Wells Fargo all up about 1% or more, John.
Abby, thank you. Can we bring Maria Tadeo back in from Brussels? An important part of this news conference just taking place between the German Chancellor Olaf Scholz and the Russian President Vladimir Putin. Maria, this headline right here, I want you to translate for our audience if you can. The Russian president says, we'll review the Duma initiative on Donbass separatists. Russia will work within the Minsk Pact on Donbass. Can you walk us through that?
Well, this is a very complex situation, what is happening here. And we have to almost go back 8 years time to understand what is going on in Ukraine. These are regions in eastern Ukraine which have been fighting for years now. These are separatists that, of course, want to break away from Ukraine, potentially join Russia. There has been many criticisms for years that Russia is, in fact, supplying also weapons. And this has been a deadly war for years between the two sides. Now, today, what the Russian Duma is suggesting that Vladimir Putin says is to recognize the independence of these regions. So they would break away from Ukraine. Of course, if you're Zelensky, but also NATO and the Western allies, you would look at this as a move by Russia to break away further pieces from Ukraine. And this is a violation of the territorial integrity of the country. The other issue, of course, is that it would call into question the ceasefire and the Minsk agreement that was agreed between the two sides. The problem, of course, is that the Russians say the Ukrainians do not comply with the terms of Minsk. The Ukrainians say, by the way, the Ukrainian side of this is being complied with, but it's the Russians that are using this as a way to further penetrate and destabilize their country.
Maria, thank you. And stay close as well as these headlines keep coming through. The Russian president saying France and Germany should push Kiev to implement Minsk. A separate headline coming from Interfax. They were responsible for a story that came out overnight that really unlocked some high gains in this equity market. The Russian army moving tanks and armed vehicles from Crimea. That headline just crossing from Interfax. This is the Russian administration. The government suggests a partial troop withdrawal is taking place. That news conference ongoing. Remember, crude lower off the back of a lot of this. Equities higher, yields higher. Another report on the banks that I think is kind of drifting past the radar at the moment that we need to get on top of. It's this one. Bloomberg reporting the following. The Journal led with this, and now we've got it too. Banks have long strived to keep a lid on the unregistered stock offerings. This is block trading, to reduce the potential for stocks to drop while arrangements are being made. Yet price declines before the trades have raised concerns for years that some investors may be abusing access to confidential information. This, as we're reporting, and others are as well, that Morgan Stanley and Goldman's could be under the microscope for block trading. Let's get some more details now with Kaylee Lyons. Hey, Kaylee.
Hey, John. Well, U.S. authorities are taking a look at this, and they have been for some time. The SEC first opened a probe into block trading back in 2018, and then the Department of Justice actually opened their own subsequent probe later on. Usually, of course, in these block trades, investments acquire a bunch of stocks at a discount from investors, and then they typically negotiate sales outside of market hours in order to reduce the potential for those stocks to drop while that transaction is being completed. But as you said, on occasion, the stock prices actually drop before it happens, which raises some concern about who has access to this information and whether or not it's being misused. So that is what is being investigated. Multiple firms, we understand, have received inquiries, but it's not clear if any are suspected of wrongdoing or if any charges are necessarily going to follow. But obviously, this is centered in a big business for a lot of these investment banks, specifically equities trading, which pulled in $32 billion in revenue for the top firms on Wall Street. Last year, that number was $7.5 billion for Goldman Sachs and $11.4 billion for Morgan Stanley, which, just to reiterate, are two of the firms who have reportedly received requests for documents. All that said, though, John, it's not dragging on the shares of these stocks or of other brokers this morning. They, in fact, are all higher to the tune of about 1.5% or more. Of course, that comes amid a broader risk-on day and, of course, rates moving in the bank's favor this morning, John.
Katie, thank you. Back with us, Julie Beale, Jonathan Golub, David Leibovitz. John, I won't ask you to comment on what reportedly is an ongoing probe, but I will come to you on the banks themselves. Nice lift. People looking for rate exposure through much of this year on both sides of the Atlantic. Is that a sector you like, John?
You know, we're not huge. We're not huge fans of the financials. We think that the yield curve is going to flatten over the course of this year, even though rising rates help a number of banks, and we think that M&A activity is going to be rougher compared to where it was last year. So if you're making a pro-cyclical call, we rather you do it in old economy stocks, energy, materials, industrials, discretionary. But there's no question that a pop in, a move up in short rates is a big help for a lot of banks.
Julie, where's your sector focus at the moment?
Our sector focus continues to be more so on companies that are well positioned. So I like names like a Fair Isaac, an Old Dominion, a Bentley. Again, these are names that I can go back to and see how they have performed in difficult economies. So it's less of a sector focus and it's more of a stock focus in terms of quality earnings, that sort of thing. And basically just doing everything I can to avoid EVs.
Everything you can to avoid EVs. Just go back to that, Julie. Why?
You know, I learned a lot during the Super Bowl, not so much during the halftime show because I know all the words to those songs, but it was amazing to me how many car companies are coming out with EVs. And so while I appreciate the new look and feel and technology behind the Rivians and the Lucids, at the end of the day, these are companies that are bending metal. And that's generally not a fantastic business from a capital returns perspective. So I think overall, it's going to be a much more competitive landscape, much more challenging. And these are smaller companies that are going up against ones that have tremendous marketing budgets and great distribution.
I also knew all the words. I think that says something about how old we are now, Julia. Maybe we're getting old, but I'll leave that to one side. I felt that way on Sunday evening. David Leibovitz, your sector focus, please.
Of course. So I would say that I'm a little bit more constructive on the banks than Jonathan. I think that there is a shareholder yield play there, which may become more interesting as the year goes on. The one area that we haven't touched on, and I would agree with a lot of the views that leaning into cyclicality makes sense, but one of the areas that we haven't touched on is what to do about technology. Obviously the Qs were at the heart of the sell-off that we saw at the beginning of this year. We've been getting a lot of client questions around how you should be thinking about allocating to tech and growth. And one of the things that we've noticed is there's massive earnings dispersion within the technology sector. There's a big difference between the companies that are making money and losing money. And so when it comes to that part of the market, very much taking a price to earnings growth approach where we're looking for things that are reasonably valued so that the multiples don't get crushed as rates rise. But we want to make sure that the earnings are there. In a rising rate environment, earnings will set you free, because if the earnings are there, the multiples eventually get to a point where somebody sees value and steps in to make the other side of the trade. And so, laser focused on the earnings as a guiding light for investment strategy this year.
John, I want to come back to you and ask you about the banks and why you don't like them. Given that this is an economy that you think will continue to do well, earnings will be decent too, and if you're looking for some optimal exposure to the cycle, where you get it from at the moment, if it's not the banks, where is it?
First of all, so I wear two hats, both as the chief strategist and head of quant research. And when we screen on things quantitatively, the banks look a lot more attractive. But when I look at it top down, first of all, the financials, broadly speaking, are expected to see a contraction in their profits next year of about 10%. If you look at other cyclicals, they're supposed to see profit growth of about 30%. This is in 2022. So that's a massive difference, up almost 30 versus down 10 for financials. M&A activity is going to weaken. A yield curve flattening is a little bit of headwind. Now, we were long financials all year last year. That ended up being the best sector in the S&P, even though most people probably thought it was tech. And we downgraded at the beginning of this year. So, I think that there's kind of a number of headwinds that they're going to be facing, even though the economy is going to be pretty good.
John, you don't sound like a man that's looking for 5,200 on the S&P year end. I mean, that's some real upside. John,
and by the way, John, here's the key. I'm a little offended. I didn't know the words to the halftime song.
I don't know what generation that puts you in, John. Jonathan Golub and David Leibovitz, thank you. And to Julie Beal for, I think, the line of the week, that the Fed has a dual mandate. It's the wife and the kid, and the investors are the side piece. Julie, I let that slide. I'll return to that another day. Julie, thank you. Thank you very much.
You.
Just getting this story coming out from the team down in D.C. I want to bring you the lead paragraph. We get some votes today, this week, on some of the Fed picks from this White House. This is the lead paragraph. Take a listen to this. The top Senate Banking Committee Republican, that's Senator Pat Toomey, has discussed trying to stall Sarah Bloom Raskin's nomination as Vice Chair of the Federal Reserve by having GOP members sit out of a vote on sending it to the floor. This is according to 3 people familiar with the discussions. Some really interesting developments taking place down in Washington, and some great reporting led by Jen Jacobs and the team down in D.C. We'll stay on top of that for you. Up next, out of growth and into cash.
Cash is extraordinarily important. Liquidity is extraordinarily important. There are times when being fully invested is not the way to go.
We'll catch up with Bank of America's David Jones on the latest fund manager survey next.
En nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor, y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes, como tienen planteados el plan director urbanístico.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Right now, caution is the name of the game. Being defensive is the name of the game. Cash is extraordinarily important. Liquidity is extraordinarily important. This is going to be a very volatile year, and it is the strong that will survive and generate returns. So definitely this is, so far cash has beaten everything over even the last 1 year. If you look at, across credit, any area of the fixed income market. So I think that proves that there are times when being fully invested is not the way to go, when you need to be defensive.
So we've heard this now from JP Morgan, from PIMCO, from BlackRock. The reasons to go to cash maybe just a little bit. Goldman Sachs, Christian Muller-Glissman saying the same thing earlier this week. And some of this was captured in the Bank of America Fund Manager Survey. Just going through some of the highlights and some of the headlines too. Just that cash allocation, cash levels, the highest since May 2020. Taking a look. Here's Abby.
Well, John, the other side of that high cash allocation is tech investors being the most underweight since 2006. So clearly there's a bit of a cautious, even a bearish tone relative to the latest B of A survey. As for the tail risks that we're looking at, not surprisingly, the most systemic, of course, so hawkish central banks, and then closely tied inflation, the possibility of asset bubbles, global recession. And as if all of that weren't enough, we, of course, have these Russia-Ukraine tensions. But the most systemic of those risks, probably hawkish central banks, of course, driving the liquidity or driving liquidity out of the system. And as for the number of hikes that investors are expecting from the Fed this year, 4 is the greatest number, followed by 3. It's interesting that 6 or more than 6, that's the least supported. So it seems as though investors think that 4 or 3 rate hikes are ahead for the Federal Reserve. And then finally, returning to that cash is king. That's, of course, what caught my eye out of this survey as well. 38% of the investors that were surveyed are overweight cash. Now, followed closely by equities and commodities. But again, cash is king. Bonds, not so much. Not a lot of love there, John. 72% are underweight bonds. Again, 38% of investors favoring cash in this volatile and difficult environment.
Abby, thank you. Here's the quote from that fund manager survey that got my attention. Investors are bearish, but not extremely bearish. We remain negative on credit and stock returns in 22 as we believe FMS investor probabilities of a credit event, recession and bear market are too low. I want to get to David Jones, who's kind enough to join us every time this comes out. David, let me come to you on this. Investors are bearish, but not extremely bearish. What divides that? What's the dividing line for you?
Well, this is a bearish survey. There's no doubt about it, but not as bearish as we are. I think what you see in this survey is that investors expect the Fed to be quite aggressive, 4 or 5 hikes this year. And they expect that, this aggressive Fed is going to be able to take inflation under control. 56% think that inflation is going to be lower this year. But that comes at the cost of growth. So growth expectations have definitely declined. And with that, you're starting to see a change in asset allocation for the very first time in a long time. You're starting to see equity allocation come down. It came down from 55% to 31%. But I would caveat that with 2 facts. First of all, investors are still very long equities. 31% have a net overweight of equities, and they're very long commodities. They're very long banks. And second of all, we haven't really seen outflows from funds and ETFs yet. Our weekly data shows that inflows to equities is actually very strong, still on the pace of last year. So, which was a record year for inflows. So, take that all together, we have yet to really see a capitulation in sort of fund flows. Maybe it's some sort of divergence between retail and institutional investors, or maybe that capitulation is yet to come.
So, David, let's talk about 2 things. I can hear it from what you're saying. The probabilities of recession, bear market, investors are pricing it too low. You think we have to adjust. Let's think about where we've really rebuilt an overweight in the last 12 months. The UK, EM, energy, you can see it. It's in the survey. Are you saying fade that?
Well, certainly investors have gotten a lot more cyclical. and they've taken on additional exposures to that, exactly as you said, emerging markets in the UK. We think there is, some potential upside there, but we think that needs to be barbelled with a defensive exposure as well. We have been out there pounding the table about staples and utilities, which still have not really rallied and have, fairly attractive valuations. We think they make a very good macro and market hedge.
Where do treasuries fit in now for you, David? Where do they fit in?
Yeah, this is going to be interesting to see because we've obviously had a very sharp flattening of the yield curve, but we have really yet to see the growth scare. We've had a rate shock, but we have yet to see the growth shock. We think that is a second half event for this year. And if things do follow the scenario, which we think is very likely, that there will be recession concerns as the yield curve potentially inverts, and that we have a growth scare because of a very aggressive Fed and the pace at which it tightens. Well, then at that point, you may want to start thinking about reallocating into the long end of the yield curve, out of U.S. dollar, short-term short rates and into the long rates.
David, always appreciate this time with you every month. It's valuable to us, so thank you for offering it to us. David Jones of Bank of America. I want to turn back to that story down in Washington, D.C. and catch up with Bloomberg's Anne-Marie. AMH, what are we learning down in Washington ahead of what's meant to be a straightforward vote?
Yeah, it doesn't look so straightforward anymore, Jonathan. You're seeing the top Senate Banking Committee Republican, Senator Pat Toomey, who for weeks we have heard his reserves and concerns over Sarah Bloom Raskin to take up one of the top posts in terms of banking regulation on the Fed, that they want to potentially try to block this nomination. And really a key question that we need to be asking is, how is this going to go forward? Because if they're able to block her nomination, what does this mean for the others, like Chair Jerome Powell and Lael Brainard? Will those nominations still go through, or will they get the Democrats on board to potentially put aside the nomination of Sarah Bloom Raskin so they can get the other remainder 4 nominees through? This is looking to be very tricky in terms of the White House's Fed nominations at the moment.
Do you think outside of Sarah Bloom Raskin at the moment, from the reporting that you guys are doing down in Washington, are any other picks in trouble here?
I don't think so at the moment. There is bipartisan support there was for the Fed chair. I would say potentially his nomination, although it looks likely that it's going to go through. Potentially the last week or so, there's been just question marks about, is the Fed moving in the right direction? And that, Jonathan, comes down to the data. And that was because we saw a 7.5% inflation handle.
AMH. Thank you. Thank you very much. Anne-Marie down in Washington. Jen Jacobs leading some of this reporting with the team. The top Senate Banking Committee Republican has discussed trying to stall Sarah Bloom Raskin's nomination as vice chair of the Federal Reserve by having GOP members sit out of a vote on Tuesday, today, to send it to the floor. This according to 3 people familiar with the discussions. There's a development for you to keep an eye on. That's some of the stories down in Washington and beyond.
Whether it's a technology first, a fashion first, or a side.
2% from New York. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's a bounce, just a little bit of relief. 25 minutes in, equities up by more than 1% on the S&P, on the Russell, on the Nasdaq. On the Nasdaq up by 1.6%. That's the equity story. Here's the bond market picture. Two-year yields not doing much this morning, up a single basis point, just short of 160 at 158.76. Yields higher at the long end, so the curve's a bit steeper. We've been seeing a flattening curve over the last few weeks. It's steeper now, up by 5 or 6 on a 10-year to 2.04%. On 30s, up 6 basis points to about, let's call it, 234. 235. That's the price action. Here's the trading diary. The Senate Banking Committee voting on confirmation of Fed Chair Jay Powell along with Biden's 4 other Fed nominees at 2:15 Eastern. That vote gets a whole lot more interesting now. U.S. retail sales and the Fed minutes coming on Wednesday. Plus, we'll hear from Minneapolis Fed President Neil Kashkari. Initial jobless claims come on Thursday. And more Fed speak with Mester, Evans, Williams, all on the docket. From New York City, for our audience worldwide, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
fly like feather. será del sol cuando la noche caiga? Cuando la noche caiga. Ay, ¿qué será? ¿Qué será de esa alondra sin árbol donde anidar en plena oscuridad? ¿Qué será del sol